My name is Glenn Tompkins, Senior Instructor here at VectorVest, and always glad to bring these videos to your attention. This is part of a series of different types of stocks that we're looking at. This week is going to be blue chip stocks. These are companies that investors and consumers they think that they're solid, established, reliable, and profitable companies. I'm going to present to you my top 10 picks for blue chip stocks, but I'm going to put a spin on them. I'm going to use the power of the VectorVest software to tell you why I think these stocks are even better than some of the other stocks that are out there that you could be looking at as well. So, with that being said, let's get right into the software. Now, again, no news. This is all the power of the VectorVest software. As we look at these are stocks that, for the most part, are well known. You look at Novo, you look at Grainger, Oracle, Progressive, Broadcom. Some of them may not be as known as some of the other stocks that are out there for blue chip stocks. Now, this is not to say that there's a lot of other blue chip stocks that are out there that could be on this list. But I was very specific in what I was looking for to bring to the table to give you the more confidence in these being some of the best blue chip stocks for you. So let's start off with value. Some of these are overvalued, but most of them are undervalued. Lamb Weston, 112 with a value of 72, overvalued. Quanta Service, 180 with a value of 154, overvalued. Novo Nordisk, 160 with a value of 98, overvalued. Then we have Grainger, undervalued. We have Oracle, overvalued. We have Packard, undervalued. We have Progressive. I'm going to call that fairly valued. Then we have Parker Hannifin, undervalued. We have Broadcom, good deal with Apple, undervalued, and HDB also undervalued. So as I look at them, the mantra at VectorVest is always to try to have you in safe, undervalued stocks that are rising in price in a rising market. For the most part, these stocks are undervalued. But does it play that big a role, knowing that these are names that for the most part people do know, and they have really good market caps as well? And these are some of these stocks, most of these stocks, all of these stocks are possibly considered leaders in their space. Now, that's just one piece of it. The second piece of it, if these are blue chip stocks, stocks that I wouldn't mind owning for the long term, right? Warren Buffett says you don't buy stocks, you buy companies. These are companies. These are companies that have the potential to long-term make money. So I wanted my relative values, which looks at the company's upside potential over the next 1 to 3 years, cast on a scale between 0 and 2 to be above 1. All of these have relative values above 1, which means that all of these stocks over the next 1 to 3 years should outperform a AAA corporate bond. Well, that lends back to the idea that these are leaders in their companies, in their industries, and that they consistently make money. That's a good thing. Well, talking about consistently making money, we have relative safety. Relative safety looks at a company's ability to meet or exceed earnings expectations quarter over quarter, year over year. On that same scaling of 0 and 2 above 1, these are companies that consistently meet or exceed their earnings expectations. Notice that the only one with the relative safety relatively low is Lamb Weston with a relative safety at 1.02 on that scale between 0 and 2, but still above the value of 1. Put those two indicators together, these are all fundamentally sound stocks. So the majority of them are undervalued. They are fundamentally sound. That's two things. The third thing that I want to look at is the stock's ability to go up more than they go down. So why is that important? If I am thinking about these as being leaders in their industries, I think that they'll continue to make money. Why not put my bet on a stock that tends to go up more than it goes down? And that's CI, the comfort index, the stock's ability to withstand long and lengthy price declines. That's important. All right. I want to make sure that I'm in stocks that even when they fall, because all stocks do fall down in price, that even when they fall, they're resilient enough to not fall deep. How many times have we been in a stock that we thought was going to do great, only to find out that it fell and it fell some more and it fell some more and it even fell more? When I have high CI stocks, these are stocks that may fall, but they're resilient enough to continue, moving higher. And for a blue chip stock, I think that that's an important play. Let's move over. Something else that I'm looking for. Do these all pay dividends? The answer to that is yes. Now, they're leaders in their industries. They go up in price more than not. They're safe companies that should outperform the market. And now they pay a dividend? I got passive income coming off of these stocks. So I have an indicator within VectorVest called dividend safety. Casts on a scale between 0 and 99. Anything above 50 is good. So when I look at these dividend safeties as high as they are, not only are these companies doing well and going up in price, leaders in their industries, but they pay a dividend and they pay a safe dividend. These are dividends that ain't going away no time soon. Not only that, they have a high probability of even increasing in dividend as well. Another thing that I'm looking for is the ability for the stock to have positive earnings and grow their earnings. Every one of these stocks, by way of our GRT or earnings growth, grow their earnings in double-digit clips. So these are the specific parameters that I was looking for in cherry picking some of the best blue chip stocks for you. That's the reason why I stated in the beginning that, are there other blue chip stocks out there that, and they're not on my list? The answer to that is yes, but maybe they didn't meet some of my other criteria that I'm looking for to put the best possible candidates in your pocket. And in my mind, based on the VectorVest software, these are my top 10 best candidates for you for blue chip stocks. All right, last thing we need to do is take a look at the graph. So again, no news, put these on a 6-month graph. And wow, there's LW. Look at the price. Here's my stop price. My stop price is a great way of getting out of the stock. In stocks like these, I want you to have patience. All right, these are stocks that are good stocks long-term, and sometimes they go through bad times. But using our stop price, which is a 13-week moving average adjusted for the fundamentals of the stock, it's a great way to use as a stop to keep you patient. And with Lamb Weston, good googly muggly. Look at that dividend pop up. Look at that earnings per share. Yes, it is overvalued, but the stock is rocking and rolling. Where would I buy? I would buy most recently at the most recent 6-month level if I'm not already in it. Wow, Power, a little bit more volatile than the first one, but still moving from the bottom left, top right, a little bit overvalued. Look at that stop price serving as a great guide to keep you in it. I love that earnings per share is now rebounding and moving up with it as well. I'd be looking at getting in at the most recent 6-month high as well, if I'm not already in it. Novo, begrudgingly going up. This is a boring stock, slowly but surely going up. It did fall below my 20-day exponential moving average and a level of support. But remember I talked about being patient? Look at the stop price. The stock's price never went below. This is ideally suited for those who want to be very patient in the stock, especially on a good quality stock, giving it room to run. But look at that earnings per share. A little bit more volatile in this, but in a channel, which is Grainger. Stop price was never breached in a channel within a channel. I'd like to see it break out of this channel before I would buy into it already. But look at the pop up in dividend. Look at the earnings per share. Look at this. Wow. Oracle just rocking and rolling. A little rebound on earnings per share as well. Look at the pop in dividends. New 6-month high as of a day ago. The stop price is serving as a beautiful level of getting out. PACCAR. Now, interesting. Auto and truck replenishment parts. I love the earnings per share. That gives me the insight that this stock should definitely have a lot more upside, even though it's struggling right now. But even with the struggles, look at this. Never went below the stop price to give it a sell recommendation for this whole time period. I love this stop price that we give on every stock, especially for blue chip stocks that I'm trying to hold for the long term. It keeps me from panicking. All right, let's go to the next stock. PGR, Progressive. Again, a stock a little bit sitting in the sideways mode right now. It did breach the stop price once, got a sell recommendation. This one I'd be a little bit more careful with as far as a blue chip stock. It still meets the criteria, but it's not quite doing what I'd like it to do right now. As I've shown you, a lot more other stocks are. I'd wait on this one. Parker Hanfin, we know that's been around. That name's been around forever. Sitting in a channel above my 20-day, above my stop. Earnings per share jumping up, dividend jumping up, gives me a lot more feeling of good insight that the stock should go up. Currently undervalued after being beaten up. And even after it got beaten up, look, it never went below the stop price. Patience. Patience tends to pay off because patience is a virtue. I love using that on these longer term stocks as a means of getting out. AVGO, like the move, bottom left, top right, new deal with Apple, pulling up. Love from a fib level, trying to push up, nicely undervalued. Earnings is up there and pop in dividends. And the last stock I have for you is HDB. This is the second stock out of the 10 that I'd be a little careful with. It met all my criteria. Even with the sideways choppy movement, never fell below the stop price. Currently is undervalued. Earnings per share looks good. Dividend looks good. Price action just is not making me feel super warm and fuzzy, but it made the list based on the criteria. Folks, here are 10 stocks that I think from a blue chip perspective that you need to keep your eyes on. I've given you some insight on when to try to enter them and looking at the VectorVest stop price to get out of them at the right time as well. If you are not a subscriber to the software and would love to have this kind of analysis, go to www.vectorvest.com/YT to get a 99-cent trial for 30 days to the VectorVest software. Folks, it's always my pleasure to bring these videos to your attention. This video is over, and until the next time, see ya. Hey VV Nation, one of the most important books that I've ever read in regards to the stock market was written by our founder, Dr. Bart Dolito, the founder of VectorVest. The name of the book is called Stock Strategies and Common Sense. It will give you everything that you need to know about how the market works, the cycles, how to value stocks, and it's very well presented so that you can better understand and get a better understanding of how the market works. Folks, you simply need to go to www.vectorvest.com/YT book to get your free edition of Stock Strategies and Common Sense. Folks, you want to do that right now.